going to already report. Adobe reports on Thursday, I believe. And one of the things I'm watching, Adobe is an interesting stock to me because it's up about 8%, 8.23% for the year as of right now, the recording today. But 7% of it has happened in the past 5 days. So Adobe's one of these stocks that's been a fantastic long-term stock to own. They do a lot of their cloud-based software that has to do with, we use Adobe for our marketing. We use the Adobe Creative Cloud. What do you use? You do use the Adobe Premiere, right? So Adobe's got a lot of products, and they just print money. They have a 40% profit margin, and they just, again, have been a long-term grower for us. They have a PE of 47, which is a bit elevated. And so what we have seen, the thesis so far this year has been anything with an elevated PE has been punished. But as of late, as of the past week or two here, what we're beginning to see some of these stocks appear to break out. Adobe may be one of them. It'll be interesting to see what Adobe is going to do. They're expected to have an earnings per share of $2.81 per share. They're expected to have revenue of $3.75 billion, which will be up 19% year over year. I don't think that's too far of a hurdle for a company like Adobe to beat. I'm not saying go out and buy it for the earnings. I think you buy Adobe for the next 5 years, and not worry about the earnings. But Adobe's beginning to climb. Look at PayPal. PayPal's beginning to climb. PayPal has I had a brain loss here.
We're talking about PE.
Yes. Okay. Thank you. Yeah, no Jeez. PayPal has a PE of around 61. So again, an elevated PE, but we're beginning to see that one kind of climb out from its slumber that it's been in here for the past 6 months.
Even like Apple.
So that's what I'm looking.
Apple kind of gained some traction over the past couple of weeks.
Yeah. To me, Apple is now a value play, even though it's got a little bit of a elevated PE. But with the cash position it has as a company, and the fact that it's negative for the year, still to date, I believe. So if I was looking for opportunities here, I would probably be looking to pick up shares of Apple. I don't think you could go too wrong with that.
I think, for what it's worth, the consensus view seems to be that the Apples and Amazons that have kind of been lagging the market this year will come back in the second half of 2021. And I kind of subscribe to that view as well. I think a lot of the stuff with the supply chain will get worked out, and all of the other hiccups in the supply side, I think all those get worked out in the second half. Well, not like completely, but enough where you can see the light at the end of the tunnel, where you can see a scenario where we completely resolve the problems maybe early 2022. And I think the market will realize that Apple shouldn't be down for the year. That shouldn't be... Like, it'd be pretty rare circumstances where Apple should be trailing the market, especially when they're putting up record numbers.
Yep, I agree. There's only so long the market can ignore these stocks. And let's get into, in most weeks, I put out kind of a week ahead what we're looking at, or it could be the culmination of the week and trying to make sense of the week, and I put that out to investors. Let's do this right now on this podcast, and maybe you can take some clips of it and put it on Instagram and other places here. If I look at this week coming up here, there's a couple things that I want to draw attention to. A lot of you who own individual stocks are shareholders of NVIDIA. NVIDIA is doing a share split. So it has a 4-to-1 share split coming up. So this is going to happen on the 20th of June, I believe. So pay attention to that. And the reason I bring that up is not so you should go out and buy NVIDIA, because we always talk about, if I've got a pizza pie and I split that up into 8 pieces, or I split that up into 16 pieces, I still have the same amount of pizza. So a share split is not the reason to go out and buy. However, if you look at a lot of times when companies announce they're doing a share split, their stock tends to rise, because there are people who go out and think, oh man, this is a better value. I can get it cheaper now going forward. It doesn't matter.
Yeah. It's like, I completely just lost what I was going to say. But, yeah, I completely lost it.
That's okay. Let me pick you up here. So Trade Desk is another one. The Trade Desk is another one. Get this. Trade Desk is doing a 10-to-1 share split of now Trade Desk is $500 and some right now per share, so it's going to
came
be
down
roughly
a lot. Like we talked about that.
Right.
That might have been last year when we talked about it, and we were both like really interested in the prospects, but like maybe not so much anymore because Google announced that they were going to do some changes to the way their ads are set up, which would directly affect Trade Desk. But they were trading at like, I think at their all-time high was like $900, and then it came back almost $500. Even after pretty solid quarters, it was just pretty elevated and just like got caught in the crossfire, I guess, with a lot of the high-flying names. But I think Trade Desk is actually pretty interesting. I could see myself adding that one too. I mean, it's on our watch list, but adding it to my portfolio, maybe not anytime soon, but just keeping an eye on it for sure.
So the reason I bring up the share splits is because I don't want, sometimes when you wake up in the morning and you thought NVIDIA was trading at, X amount, and all of a sudden it's cut by a fourth.
And now it's at 200.
Yeah.
Right.
So you panic. So no, don't panic. You have actually more shares now than what you had before. You have the same amount of NVIDIA and you have the same amount of Trade Desk. You just have more shares of that. The other thing that I want to get into is...
I just remembered what I was going to say. Okay. So if I just lost you, I'll put my...
This is impressive.
Oh my gosh. Hold on. I'm gonna force myself to remember this. Hold on. What were we just saying about jog my memory?
I was just mentioning that you don't want to panic when you wake up.
Okay, so it's unlikely that like Nvidia's not going to do a share split and like increase the liquidity of their stock and bring like the ticket price of their stock down if they don't think it's going to rise in the future. Because like think about like the reverse of a stock split where they're like consolidating shares. It's like that's
right.
If it's like $1.50 and they think it's going to be $1, they'll make it like worth $4, so they don't like get delisted or anything. But it's like if they think that the share price is going to go up, that's when they would do a stock split because they want to like increase liquidity and everything. Whoa.
Yeah, in short, if you believe your stock's going to go down, you're not going to do it. Not going to do a stock split.
I thought I was like showing early signs of dementia or something.
Oh, hope not. The other thing we have, I think, in the market is we're beginning to see a tug of war. And on one side, you've got these companies that are reporting these amazing earnings, and I think that's going to continue. On the other side, you've got the threat of potential rising interest rates, and you've got the threat of inflation. And so I think what you're going to have is a back and forth. And I think for the foreseeable future here, even though I believe long-term the market continues to trend up, I think it's going to be a volatile trend up. And I bring that to the attention of it's actually a picker's dream. So if I've got cash, I don't think, even though everything shows that time in the market, not timing the market, if I'm buying individual stocks, we should have some opportunities here coming up that our favorite stocks are going to have these days that trade off, and it's our time to pick them up. So if you have cash on the side, this might be actually a fun time to be an investor because we should be able to find these moments where we can pick these long-term winners up for discount prices.
I've been texting you and texting other people for that matter about a big play right now is the semiconductor play and people looking for ways to play the shortage and see if there's ways to benefit off that. And we were just talking about NVIDIA. One of their competitors is AMD Advanced Micro Devices. I think there's a lot of unrecognized value with AMD because we were talking about I have it pulled up here. Like we talked about PEG ratio. Anything below 2 is considered a value. Well, AMD has a PEG ratio of 1.2. They're trading 30 times next year's earnings, which is comparable to like a more value play in the semiconductor space, like Taiwan Semiconductor or Intel. Well, no, Intel's lower, but it's about the same as Taiwan Semiconductor. And it doesn't pay a dividend, but they're expecting earnings to grow 232%. Or no, sorry, I apologize. It grew 232% from last year, and they're expecting earnings per share to grow 600% this year. And but the shares have been trading flat since like last July. It really hasn't seen the same uptick that like NVIDIA, even though they're probably expecting similar growth. So I think AMD is a really good play right now. I've been picking up shares of AMD.
Agree. The other thing that we're looking at is taking place in the market is if the growth targets do continue to pan out like what is projected, then we should expect to see rising yields in bond. And because of that, we want to continue to be in shorter duration if we're looking at the investment grade. However, I will point out our high yield bonds. Our high yield bonds have done fantastic.
Yeah.
The holding that we have in most of our models is PIMCO's ticker symbol PTY. And if I look at that up to date, about 14% from a high yield bond, and it pays 7% yield on that. So that's been a very nice one to own.
Yeah, that's a winner. And also, the REITs, the Real Estate Investment Trust, and all of it. Or are you going to bring that up next?
Yeah, the REITs are right on the money there. So our VNQ is our holding that we use for most of our real estate exposure, up 23% for the year. The thing that I wanted to point out is, when we're in meetings and I'm talking to clients, the first thing that they ask, what happens when interest rates begin to rise? Well, if I'm talking about residential homes, then yeah, that's probably going to slow down the purchases of the new homes, purchases of the older homes, because you're going to price out some of the market with the interest rates rising. But keep in mind that VNQ, that Vanguard Real Estate ETF, has a lot of commercial real estate in there. And commercial real estate should actually benefit from a recovery.
Sure, yeah. And one that you called, pat yourself on the back, was Starwood Properties, or ST, ticker symbol STWD. You told me to pick that one up at like $12 or $13 a share. Now it's trading at like almost $27. You really picked that one from the bottom, and it has like 10% yields or 10% dividend. So yeah, you called that one.
I told you to buy that one and hold it forever because it's going to pay you that $7.
We were both thinking it was going to take a while for that to come back, and it came back in less than a year.
Yeah.
You don't have to go all in on YOLO AMC. It's like there's value plays where you can make pretty stellar returns.
Yeah. Be patient, and this is the long-term game. That's a thing that I get into, and I'm going to end this with this. Is anytime that I see there's no shortage of slot machine investments out there, to say this thing, where you're pulling that lever and you're hoping it goes up. So as many people win that, there's going to be as many people that lose that get in at the wrong time. But the thing that never fails is buying the quality investment and holding it a long time. Mm-hmm. I know that's boring because nobody wants to wait a decade in order to quadruple their return into something, but that's the surest bet.
Yeah. And I think that a portion of your portfolio should be allocated for looking for like asymmetric return, which is why I have like Bitcoin, because you think that the opportunity for return is greater than the loss that you would suffer. But I don't think it should be detached from reality. I still think it should be in the realm of investing. I don't like some people say 5 to 10% of your portfolio should basically be a slot machine where you're playing around with like a Nikola Motors or playing with AMC or GameStop. I don't subscribe to that view, but I think that maybe 5 to 10% is riskier, definitely riskier, but you should still have like an investment thesis behind it.
Sure. Yeah. Because if my savings rate is on point, then I should not have to take uneducated, crazy gambles in order to try and hit it. If my savings rate's on point, the percentage of my paycheck that I'm saving, and I'm saving in quality investments, and yes, a portion of the portfolio should be in riskier. If you look at most of our portfolios, we may have emerging markets, or we may have small caps, or we may have something that is our high yield bond fund is a little bit more risk return in there.
Well, I would say more volatile even. Like I don't think small cap is like it's more volatile, but not necessarily like riskier. Like because you would expect in most markets, if everything's doing well, small caps would do well as well.
Yeah. I guess it depends on how you define risk. And I agree. Risk to me is ending up at the point that you want to be with not enough money. It's not in the volatility in between.
Sure. Yeah.
So, Derek, anything else to add before we head out into the week?
As always, thank you guys for listening to Dynamic Growth. Please consider sharing, subscribing wherever you get your podcasts. Subscribe on YouTube at Crosby Advisory Group. Follow us on Instagram and Facebook at Dynamic Growth Pod and at Crosby Advisory Group. And email us with any episodes or any topics that you want to hear us talk about. I think next week we're doing goals. Are we doing goals next week?
We can do goals. That can be our goal. Sure.
Our goals. So keep an eye out for that, and we'll see you guys next week.
Derek, the thing that you just mentioned that I think is important is I actually was at a soccer game and a listener asked me, how do we actually, you had mentioned that for viewers who are watching us, how do I actually watch it? You mentioned the YouTube. So real quick, walk us through that. How would they actually find Crosby Advisory's YouTube channel?
So here's what I'm going to do. during the disclaimer, I'm going to put like a screen record of like how like what to search and everything, because the YouTube algorithm hasn't favored us yet. Like you have to kind of build up some stuff. We're getting there. So if you search Crosby Advisory, you should be able to find us. But
Okay.
hopefully you don't have to do too much searching for very long. Hopefully we'll get some behind the YouTube algorithm.
Gotcha. All right. Please remember, Crosby Advisory is a registered investment advisor. At any time, you can request our forms ADV 2A and 2B, which go into the business practices and qualifications of Crosby Advisory. Today on the show, Derek and I may have mentioned specific securities. That is not a recommendation for you to go out and sell them or buy them. Do your own homework. Know that investing involves risk, including the potential loss of principal. You should carefully consider all risks and fees before making an investment. Crosby Advisory is also a licensed insurance advisor. Insurance products are sold and serviced through Crosby Advisory.
You can also go on the website, crosbyadvisory.com.
There you go.